Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is the 20th Inauguration Day. Joe Biden expected to sign a number of executive orders. I'm not sure what the nature of them are. I don't think that they're going to be particularly good for the markets, but perhaps information about them already out there and already priced in. Let's go and see what they did overnight. By the way, a bunch of conversation there this morning. Good morning, Bill. Good morning, Winston's mom. Okay, so let's move that. Here we are in the E-mini, and pretty good move overnight, over the weekend, and then yesterday during our trading session, pretty choppy. There's a bit of downward movement when Janet Yellen said things about taxes, basically suggesting that the Democrats were okay to raise taxes a little bit. Ultimately, though, the market shrugged it off. I don't know if there were other things that she said that maybe pushed us back up, because I don't really see a whole lot of discussion about it in the media, actually. But we did end closing the day on the highs, and now here in the overnight session, once again, they're pushing up a little bit, and we are eyeing all-time highs. In the treasuries, a little bit of short covering, actually. After that talk from Yellen, one of the big things that happened was she's talked about looking at a 50-year bond again. They keep talking about that, then it doesn't happen. She's talking about it. The 30-year, like, really, just went wild over that. You can see how many tails there are on those little candles there. So, and there was a little bit of steepening with it too. Should note though that the 2s and 10s haven't moved a whole lot lately, past a week or two. Oil continues to look good. It looks like I need to roll over the oil, huh? Roll over. Cool. So, but oil still looks good. All of the analyst forecasts are that oil will continue to go up. Gold having a rally, and then, man, I tell you what, if you trade in gold, that's got to be frustrating. I don't know what is the deal with its behavior and why it behaves the way that it does, but on the intraday time period, it does some weird stuff, man. It looks like copper following it too, so this might be something to do with the miners and supply. We do get some numbers, Canadian numbers here. Overall, though, not a whole lot going on until later in the week. Let's see. Let's pull that up here really quickly. Forex Factory, where I like to look at that for the week. We got Philly Fed, unemployment claims, building permits, housing starts tomorrow, and then Friday, some PMIs, existing home sales. And then the week after that, FOMC. And GDP. Well, a couple of these numbers coming out earlier than the beginning of the month too. Interesting. All right, so that's what we got. Let's turn on the Texas speech. So for me today, I'm going to be, they're on a tear. I'm not quite sure. Well, it must be earnings related is probably the most likely reason for all of this. And they just like to go up in the overnight session. But I'm also hesitant to take risk on Inauguration Day. There's no news. I think that even though the action is definitely tilted to the upside, the action may, I don't know. There's a risk of the action being really slow. It's just that at the moment that's not the case, right? Our Bill in YouTube chat, that isn't our old friend Bill that we know through John, is it? I think he was from Florida. Robin Hood day traders are squeezing the hedge funds. Here's why it may continue. Are they talking about GameStop? I tell you what, the GameStop one, I don't know a whole lot about that story. All I know is that GameStop is not a company that I personally would want to be invested in long term. But apparently, the guys on Wall Street Bets think otherwise, and there has been a short squeeze, and they are claiming that it was the Wall Street Bet guys that did it. And Jim Cramer has been congratulating them and all of this, that, and the other. The whole thing is just crazy. I'm just looking at the trajectory of this move on the ES, and it is definitely an aggressive buy. It's a less than 10 points, so we do have to keep in mind the scale has kind of compressed a little bit. But for the past hour, it's been nothing but buy over there. So I don't know, man. Let's hear what's NQ Traders asking me here in algo development. My algo typically uses NQ series for decision, but places orders against mini NQ. You can control the order submission. Good morning, Uzi. Well, it's interesting to me that the treasuries look kind of tilted to the upside. Given the aggressiveness of this buying, you would think that they would maybe be selling a little bit. But this is probably due to over here in the ES. I'm thinking there's some really big guy or a number of really big guys that they want to buy the ES, and they want to buy a lot of it, and they want to buy it before it opens. And I don't know. It's not like they are not putting out liquidity on the offer. I mean, look at this 274 traded at the top, and there's a 500 lot on top of that, and there's some relatively big ones above that as well. You want to see a little push down to 68.14 to 18 zone to consider a bid for now, just watching the chug along. Well, but what I was getting at was like, wouldn't it? This might just be the pullback and you want to sell it here. Kind of what I was thinking. I mean, the overall trend for the overnight session is down. I'm not sure if there's anything directly happening right now that we would expect should move it, though. Well, I got one of my algorithms went long and one of them went short here. I think the one that went short, it was long at one point. I'm starting to think Indy is a good signal, but it is overfit to the past year, I think. Now, Joseph is going to be pretty hardcore fit as well, but that is intentional. I guess the thing that frustrates me the most, though, is there was another one. Was it Sam? I forget who it was. Anyways, that one was like the range bound strategy, and it did not work. And we retired him. I probably need to try and bring him back. One of them is confused. Uzi says, certainly possible. I'm looking over the last few days, and the tendency is pushes down to lower ends of value and finding bids. That is true. So yesterday, remember we were talking about the guy that made this formula? Man, why am I even having a hard time even remembering the name? Robert. Of course, something ridiculous could always happen today. Who knows? Yeah. Well, with it being the inauguration day, I'm not feeling putting on a ton of risk. Anyways, I went and I looked this guy up. And actually, let me see if I can find it in my library. I'll find you the video. Yes. Robert Almgren. This is this one right here. I was watching this video. And he is talking about, they do their algorithmic execution thing. So basically the gist of it is that they have some algorithms to minimize the net impact of their trades in terms of how they are spread out. That reduces execution costs for really large firms. It's interesting because he was saying like the net impact of their algorithm on their trade was like a tick, but to this company that they were executing it for, it was like millions of dollars a year. Anyways, he's talking about using KDB, which is something I've used in the past, and using that as their real-time data series. So kind of like that's their stand-in for NinjaTrader 8, and taking predictive signals using it. That they use these predictive signals to improve their entry. And the kinds of entries that he was talking about were pretty similar to the things that I look at. He was talking about looking for the presence of large orders, situations where the bids were pulling or were likely to pull, places where there was a sweep and it is expected to come back a bit. But he showed us all these, and he's like, well, why am I showing you these? Because there are conditions. There are conditions about the market that, you know, have to be set in order for the probability to actually be in favor of doing this. And he wasn't sharing that with it. So now I'm sitting here wondering, okay, so what was it that he was looking at? But I think the thing that would be more interesting to me is like, what kind of a probability does it actually give them when they get that? Anyways, so I watched that yesterday. I think I actually found contact information for him, but I think I want to understand the principle a little bit better and maybe have some questions before I try to do anything like that. Anyways, what was I talking about that? Oh, now Brandon is short. That's interesting. Did you turn the bots? I did. The robot is on. Yes. Thank you. We want them on at 620, honestly. That's what the time period that they were back tested on, but I have to say it's interesting how poorly they've done the past 2 days. I mean, you look at it right now, it's not doing pretty good. It's not doing very well. There have been times when they were just all right on. So it kind of seems to me like there's a lot of room to optimize it still. This is where it's like, you know, none of them are a 1.5 profit factor. So maybe if we had selective, I had it only post a potential buy sell and I was making the decision, maybe I could get them to 1.5. I don't know. Yeah, there's a lot of talk in the media about the presidential pardons. They love to talk about that. Oh, you bookmarked the whole thing about Robert Almgren? So here's the funny thing. Well, that one is KDB. Actually, I should check their page. What do they got on here? Yeah, I don't know if I really want to subscribe to that, but they do have some interesting videos. Anyways, Mr. Almgren, he started a firm called like Quantitative Brokers or something like that. And they have a YouTube channel. And it has 23 subscribers. I was like, they should have more. They should have more. This guy is like a legend, academically speaking, and he's not that well known. It was kind of interesting to me. Let's see here. Biden issues barrage of 15 executive orders on border, climate, immigration, and a 100-day masking challenge. Screw that. I've been wearing the mask for a year. Why? With a guest appearance by Dr. Anthony Fauci, who will screw him. I don't trust that guy one bit after all that's gone on. All right. As expected, Biden will also roll back the Trump travel bans citizens of certain Muslim countries introduced at the very beginning of the Trump administration. I think that they're going to regret doing that. and a comprehensive immigration package will be sent to Congress straight away. So I was reading stuff at the beginning. Have you developed the strat developed by Rob Smith? I'll have to look into it. If it's a candlestick tick, if it is a candlestick strategy, I would be really skeptical about its long-term efficacy. So what I have found with the candlestick patterns that I've tested is that you'll find markets where they work really, really well, and then the market will change, and you find markets where they don't work very, very well. And I believe that the reason for this is that the advantage to a candlestick strategy is that you are selecting for a signal that doesn't necessarily happen very often, right? So if your strategy is based primarily on, say, a moving average, then you're actually going to get a decent number of signals, and more importantly, you're going to come into a market where it just crosses the moving average over and over and over again because it's range bound or whatever the deal is, and then your strategy takes a ton of really bad trades, and that's one of the things that really hurts that kind of a strategy, right? So candlestick sidesteps all of that by having a signal that is by its very nature rare, right? So then it kind of depends on what kind of a market is it where that signal shows up frequently and is correct. So you could get some situations where you'll see a YouTuber will say, hey, this is a strategy that's profitable, but they're only showing you a year's worth of data, you know? I believe one can trust Fauci in the science he represents. I do not think we should trust the politicians. No, like straight up, he has lied to us about on a number of things. Another thing that is, well, he's not exactly the one pushing this, but a lot of health experts are saying, even if you have the vaccine, you should continue to wear the mask because you could continue to spread it. That's complete bullshit and is completely contradictory to everything that we know about the science and the empirical evidence that we have on the spread of the virus. But they have to say that because you can't come around and create a special class of citizens that if you've been vaccinated, then you don't have to wear the mask, and that creates a social problem, right? So they have to say that. And Dr. Fauci has been and has admitted to basically saying things based on how he wants the public to react to it and not based on what was actually the science. And furthermore, he has been a large proponent of lockdowns. He believed that we should have had a hardcore lockdown on the whole nation. And I don't believe that the empirical evidence backs up the idea of a large-scale lockdown. I'd trust doctors who actively treat patients before I'd trust Fauci. Well, here's the thing. I think that any doctor that's employed by the government is probably a little bit questionable. And you're going to have to be smart enough to be able to decipher when they're giving like actual real advice that will help you and when they're trying to manage the public, you know? And this is the way that it is. But I just keep it. There's been a study that's been out recently. This is the second study of such that has had results of this nature, and the empirical evidence at this time does not support a large, burdensome lockdown. So I can say that, right? I can say that. That's Trump wishes new administration great luck and great success. Yeah. It's interesting, all of the Yeah, I don't really want to get him in. You're watching the Trump send-off right now? Yeah, I'm just kind of, I think I'm going to sit here. So I just want to note here that at 38.08 and 3/4, they're still trading relatively large orders. I mean, 350 at each price in absorption pre-market this early is a little bit unusual. So it seems to me that even though we're in like a really high uptrend, the market is also, in terms of order flow, actually quite tight. Any inauguration day drinking games? No. Man, you know what? I was feeling really great with like the coughing and everything, and then yesterday I did some exercising. I did some really aggressive stair climbing, sprinting, and then ever since then I've had to cough a little bit again. Man, you know, you say Rob Smith, and that I'm just thinking about that again, and I'm like, no, I've heard that before, and I don't think that it was in a good context. Doesn't even. Oh, is it the strat method of trading? Yeah, okay. That's who that is. Okay. So I need to go back and change my answer, Blunt 420. I've back tested this and it didn't work. So Rob Smith is the T3 guy. Yeah. So there's a T3, and they have, there's basically three major, I guess, parts to his strategy. Is one, he looks for time frame continuity, which means that like we're positive on the hour, we're positive on the day, we're positive on the month, and we're positive on the week. And when all of the time frames are in continuity, you have a better chance of finding a profitable trade. The next thing is that he states that all markets are continually broadening, and that's really the true chart pattern that you're looking at, is just that it's broadening. And so he has a way of finding an inside bar and, you know, tracing it back and creating the broadening formation. That part is really sketchy, because the rules as to how you draw those aren't really programmable. They're not. It's a little bit too vague, and kind of, you know, him picking the one that he wants. You know, there's an art to it, basically. And then the last thing is he has setups based on combinations of inside and outside bars. So there's these situations where you have a, you know, like a normal bar, and then there's an inside bar, and then it breaks out to one side, and then you take it in the direction of the breakout. So I made specific back tests, trying to backtest the setups from that looked the most promising based on that market. And we made backtests on the time frame continuity stuff. That's why all of those, you know, that video that I have about, you know, trading all the time frames, all of those tools that we made to test the T3 stuff. And the end result was that on futures, it was not profitable. Now, the really big caveat that I would give them on all of this is that they trade stocks. And so if you are looking through stocks and you're selecting an individual stock based on identifying those behaviors in the stock, you do have a good chance of success in those kinds of situations. Although I would still be really cautionary about all of that, because they're successful enough that I really think that edge, if there ever was an edge, is probably already arbitraged away. But they do trade it in stocks. So when we looked for those patterns in the indexes and everything, it just straight up didn't work. But yeah, it didn't work. The empirical evidence did not back up. The empirical evidence was not in favor of using that strategy on index futures. That's what we should say. I thought there was already the hand up. No, I don't think so. I think there's this whole thing, though, that part of the inauguration ceremony is passing the football and who's doing it and all that stuff. I thought was like, you gotta be kidding me. This is getting stupid. Another thing I say about all of that was that because I backtested this because a friend had access to their course, so they explained the setups to me and I backtested it, and based on all of the research that we did and what was actually in that course, it's such a waste of money. It is such a waste of money. I can't even. There's still Coomers thinking this is all part of the plan. I know, right? When this day is over, do the QAnon believers finally give it up and realize that the whole thing was a bullshit hoax to distract Trump supporters and keep 8chan afloat? Because seriously, and I've noticed over time, the conspiracies or things that they're looking for and stuff over time has become increasingly more damaging to their own goals. Essentially, it's like I just can't. The people that believe this stuff are doing more harm to their causes than good by believing it. It's really quite sad. The thing that I find so frustrating about all of that is that the Donald Trump movement in the very beginning, there was a lot of, okay, here is the data that we have on voters on this particular issue. The media is making a really big deal out of this and telling us that we're evil for wanting this policy, but the majority of the public supports it. And so that's how they kept doing this thing where it was like Donald Trump would follow his instincts, the media would push against him, and he'd win over and over and over and over and over again. And he was like really successful in the beginning during his campaign and stuff like that. And then the thing that I saw was that like halfway through his term, some of his advisors and stuff moved on. And then he got into this mode where, he looks online and looks to his online supporters. But by that point, the loudest component of his online supporters were these QAnon retards. And then that's when I started to see a lot of really bad decisions made, I know someone deep down the Q hole, and they also believe Hollywood stays young by eating pizza from a place that sells babies. Just the social media they absorb and a love of conspiracy theory. Yeah. Well, the funny thing about that one is that there was how can I put this? Like a good story behind all of this, right? There is. So first of all, there are supposedly to my from the research, and I haven't done this in a while. Okay, but last time that I looked at this, there are companies that basically use stem cells harvested from, like umbilical cords, essentially, that are being used in rejuvenation therapies of some kind. That is actually a thing, apparently. How widespread it is, and it's part of this big conspiracy, I think is like really stretching it, but that is a thing. And there are also pedophile signals that pedophiles have used in the past, and one of them is a triangle, and one of them is pizza. It's true. And like the reason that we know this is because there are FBI documents where they talk about it, and they talk about how they try and identify and find the pedophiles, and those are some of the things that they look for and that were known. Okay. There is a establishment in DC that is a pizza place that is frequented by a lot of really powerful politicians. And so they kind of put all of these things together, and they said, so these are pedophile cult by the elites going through this pizza place, right? So this is kind of like they took a couple of facts and tied them together into this crazy conspiracy theory that didn't have any direct evidence, So there was that side of it. And then there was the Podesta thing. Now that one, it gets really interesting, because here's the thing about the Podesta. When the Podesta emails came out, he said, "Oh, they're not mine," and the media was all like, there's no proof that this is actually his emails that is being released by WikiLeaks and all of this bullshit. And the Donald Trump supporters at the time, like, their primary defense was, well, WikiLeaks have never let us down before. Well, they started doing things like somebody actually hacked into his Twitter account, and they did things like they actually verified the emails using the keys that are transmitted from Google on those email messages, and verified that they were genuine email messages that were sent by Gmail. So the Podesta emails have been proven to be true. And I don't think that anybody disputes that now, but basically what happened was that once they were proven to be true, like, they all just shut up. You know what I mean? They all just kind of forgot about it. Okay. Well, so one of the things that happens in the Podesta emails is that there's this lady named Abramoff that does satanic rituals, and they claim that these satanic rituals is really more of a performance art kind of a thing, and Podesta was into that stuff. Not only was he into that stuff, but there was an email chain where they were talking about going to his house to see this performance. And then after that performance happened, there's some emails talking about that he got his hand infected from a cut. And so people think that as part of the ceremony was cutting the hand, and that his hand got infected from it. That part's not proven, but what is proven is that they did do one of her performance art things at his home. So the QAnon people will just kind of tie all those things together. You know what I mean? But like I said, it was this again was interesting, because when it was during the election and everything, these were one of those things that for the Donald Trump campaign were like gifts from God, right? But the problem is that then it allowed conspiracy theory thinking to creep into the base. And I'm just telling you, from a like a political strategy perspective, that one, these conspiracy theories are not proven and are false, and there's a lot of really ridiculous things in them. and two, that it ruins your movement. It makes your people stupid and causes bad decisions. And it's really to your advantage to root out conspiracy theories and false information from your political movement. If Donald Trump starts his own political party, I believe that will probably be one of the biggest issues that they face. Everyone having a Biden-Harris party today? Yeah. I don't even know if we're going to turn it on here. I guess we're probably going to have to turn it on because the markets might react to it, but I don't think it happens until long after we're done streaming though, right? Well, it's the top of the hour. They did finally move a little bit higher. Man, I tell you what, when I look at the chart, it's like, oh, wow, that's like a really good move up. But then I realized, like, okay, that was only one handle up. Sure looks good, though. And what's the deal with my robots? I gotta tell you, the thing that concerns me about them right now is that when I go and I do the back testing, it was like, one of the things that I was concerned about was how many trades overall they were taking and things of that nature. And it seems to me that they're all taking too many trades. That the four of them combined definitely takes too many trades. And that they are often taking contradicting sides. So I thought that the certain Sharpe ratios and what do we say, profit factors that I was getting on it, they weren't really in what I look for, but I thought that they were good enough to be worth trying. The moment, well, we're going to keep running them for a while, but at the moment I'm kind of leaning against it. I'm thinking we need to go back and look at some of these and maybe try to incorporate higher time frame stuff. I think that before I was looking at 50 period moving averages and things like that as filters, but I think that I need an even larger one. And probably instead of just looking for whether it's rising or falling, I should look for if we're above or below, because that will happen less often as well. President Trump left President-elect Biden a note. And now people are posting the picture. Dear Joe, I really won the election. What? Oh, man.
Winston's mom says top of the hour. Will everyone watching please take a second to hit the like button? Thanks.
Oh, man, is this really happening over in gold? Look at this chart, man. Ugh. So I'm not watching the order flow. I'm not watching the key news points and things that might be affecting the gold markets. So I don't really know why it's moving. Maybe it's not as mysterious as it seems to me from an outside observer, but I tell you what, movement like that has got to be incredibly frustrating to trade. Down a big chunk and then right back up. Well, I guess that's from 1830 to 1850. I guess that's $20. It's not like an insane size move, but I really wonder what's going on over there. It's moving a lot. Is this leading to... It is, in fact. Okay, so the dollar is moving. That seems to be the driver there in this instance. Treasuries are still kind of chilling up here. Netflix is the one to blame. Could be some stocks moving around might be having an impact for sure. Well, I don't know. I got another Pop-Tart. I'm going to eat the Pop-Tart. What are you saying here, Gary? The ATR of an instrument with its volatility and all will be fine. So you know what? One of my trades, one of the robots, that's the one that didn't make it, actually, was using the daily ATR to determine whether it wanted to trade or not. I think it's more than that, though. I don't think volatility alone is the only thing. I don't think it's just volatility. I also think that it's strength of trend. So, in particular, with Indy is taking a counter trend trade. And there are certain situations where the longer term trend is strong enough that there really just doesn't make sense to be taking, like right here a short. Like, why should I be taking a short, That doesn't really make much sense. So I was using some moving averages to try and filter that stuff out, right? But when I did that, it just filtered out too many trades and reduced the overall profitability. Didn't help it. So now I'm thinking maybe I just not using a long enough period. Are your robots on? No. The robots have been fit to only trade basically the time that we are here, which is the most active time in times of the day. I have been working a little bit on strategies that would maybe trade the whole day or the extended session and things like that. The thing that I have discovered, though, with order flow, and because these are mostly order flow based trades, is that the order flow during the time period that we trade and the order flow after lunch and the order flow during the overnight session and the order flow during the London session is different. I'll let them know. If they go all day, it will lose money. I've tested it. by the way, there has been an explosion in Madrid, Spain. Pictures are starting to come in, and it looks like it's a pretty big like though a whole building is gone. So there's a real serious thing going on. Is everyone speechless that the robots will drain their account if well, no. I think that I really do think what's going on here is, like, when you look at the market that we're having at the moment, it's like it's actually quite constrained compared to 2 months ago. So, but it still has strong trend in it. So it's kind of weird. It's kind of like you're starting to get order flow that would typically keep you range bound, but the trend continues anyways. So because you're not getting the same kind of order flow that these robots were really designed to take advantage of, it doesn't surprise me that they're not doing great at the moment. I think yesterday in particular, I felt like they all did really terribly. And it was really frustrating to see how both the longs and the shorts lost on that day, Each money center has its own movements based on many factors. Yeah, exactly. And I'm setting all of this up to take advantage of the most active session when we trade. Because originally I took it as, well, I don't expect the robots necessarily to be, useful, but they might give us some things that we can use discretionarily, right? But then it turned into maybe we can actually run them. So, I don't know. It could be that once this week passes, Joe Biden's in office and we start getting news days again, and or maybe the market moves down, who knows, that they start to do better again. And when they do well, that most of these are taking like really good reward ratios, so they should come, wash out the ickiness from yesterday pretty easily. But we'll see. It could also just be that, any one of them on their own is pretty okay, but the combination of them isn't necessarily very good. For certain futures? Well, I don't know. That whole post-lunch time period to the close, there's definitely some interesting action to it. It seems to me, though, that the most profitable time periods over the past year is like the Asian session. Perhaps because of the juicing that you've been getting from the banks in China. Okay, well they are past the overnight stop out zone. I don't necessarily have any, like you tend to see really awful moves in the stop out. They seem to matter more in the regular session, but Globex most calming session just goes and creates gap ups, erasing negativity. Exactly. Those hours get you money center overlaps. I don't know. Just the reason why I don't pay attention to those time periods in particular is because your order flow signals just don't work as well. Literally every order flow based signal I've ever tested essentially only worked during the peak times. Yeah, I saw that headline too, Uzi. Gwyneth Paltrow's vagina scented candle explodes. I was like, what? Oh, sorry. When you said 11 to 4, I thought you were talking about early in the day, not late at night. So you're saying you get the money center overlaps because you got like the Asian markets coming through and then the crossover to the London markets. Yeah. But I honestly believe that the main driver in the overnight session that has been leading to the specific behavior that we're talking about is China banking in particular. Well, what do you know? We went through the stop out zone. Like I said, I haven't found that line to be particularly influential in the overnight session. But we did just get the first orange 5-minute candle, the first down 5-minute candle in 45 minutes. So chickens are too expensive? Nah. I guess you have to buy them food and stuff. The whole thing is, yeah, you get eggs, but you have to buy chicken food. Lucas, good morning. How are you? I haven't talked to you too much recently. Have you been doing okay? Whenever I see some of you guys, because it doesn't surprise me that not everybody wants to listen to me every day. I totally get it. Sometimes I distract myself, right? But when I see people that have been around for years and they're still around, that really feels good, you know? So the one thing I think that we've got here is that we got serious traders that take this serious and are in it for the long haul. And although I can't do like a survey or anything like that, I think that we have a higher percentage of traders that persist. There's certainly a certain group of people that will come and go very quickly, right? But there's a core group of you guys, and I'd say that it's probably like 50 people overall that have just been with us from the beginning and keep coming and never give up. Twitter's pretty quiet this morning too, man. Huh? See, I kind of wish that maybe I had gone long. We could have picked up 6 points, I suppose. Why did the robot cross the road? Because it was programmed by the chain. I think last year ended with a lot of want-to-be traders that are probably not going to last until this year's end. I'm not so sure. I mean, there's definitely some wannabe traders that aren't going to last. The question is, when is the reckoning going to come? All I know is that when people look at the last 10 years, when people look at the last 10 years and they say we've had this incredible recovery and there's hardly been any volatility and it's just, they act like it's just gone straight up. No. If you're a day trader, it certainly has not done that. There were periods, like probably the best example was the Eurozone crisis. And that happened twice, and there was the taper tantrum, and I mean, it was really like every summer almost, where some crazy market volatility would come in, and we've definitely seen it since we've been doing it in the last 4 years, right? Where you get a period where the markets are being juiced and they move up and lots of traders show up. And then there's like a huge market crash and a little bit of a break. And after that break happens, a bunch of people disappear. Are you going to stop eating those delicious nuggets? No, probably not. Most of the traders that are victims of trading attrition are typically day traders, probably. Because honestly, if you are swing trading, and you have something that's anywhere reasonably good, so like here's the thing: if you're a day trader and you break even, you have a strategy that's break even, you're gonna blow your account eventually. I like honestly, because what's gonna happen is you're gonna be break even during like normal times, and then the bad time's gonna come in, and you're gonna blow the account. If you are trading a strategy that is essentially break even, but you are swing trading, you're probably going to make money. You're not going to make as much money as if you just invested that money in the index, but you're probably going to make money. So I find very, very frequently swing traders that think they're God's gift to the world. And when you look at their actual performance, you realize that it's actually not that good, even though they made money. And that they make money because the S&P 500 tends to move up, but they're not actually catching any alpha compared to the index. If you're not comfortable applying your trading knowledge or strategy to longer time frames, well, I think you just got to realize that market behavior on long time frames is different from market behavior on short time frames. Like it just straight up is. Okay. So on long time frames, and I'm even talking maybe of longer than swing trading. So like I think a lot of people think swing trading is like a trade that's like 1 to 5 days. But I'm thinking particularly here in the futures trading space, I'm talking about things that are like on weeks, right? So when you start to look at the behavior of markets on time frames of weeks to months, there is a strong degree of autocorrelation. And that is how all of these CTA strategies work, right? Is that they are finding the momentum and taking trades based off of the momentum and holding them for weeks or months. And it is a different game because a lot of the how do I say, like, the alpha, I guess, the thing that's going to make a difference for you over there in those kinds of trades is, like, if I'm going to be long the E-mini for this whole time, I might need to be hedged against interest rates, or, you know, there's different things that will kind of impact your costs on the margins, and that's kind of where the relative performance between different CTAs comes from. But they are literally taking advantage of the strong degree of autocorrelation to markets on long time frames of weeks to months, right? Now, if you try and apply that same kind of behavior to short-term markets, you will lose money, because the actual opportunity cost, the execution cost of taking a trade based on autocorrelation within a futures market on a very short time frame of, 5 to 30 minutes is too high, essentially, and you will on average end up losing money. So even if you are in a market that has a strong degree of autocorrelation, like this market that today, you kind of will end up with these things where it's like, as soon as you take a trade, it'll come against you, and it might not hold your stop anyways. So I get the whole idea of, like, applying it to longer time frames and everything, but I'm just saying this study of the market microstructure is very different from the study of the market on a weekly to monthly time frame. It's completely different. The markets will molest you. Learn not to get. It takes time to learn when you are getting molested, right? Well, I tell you what. Okay, here's the open. First few trades, still long. Okay, actually. Well, so the initial move was up, but it almost immediately turned back down. The market is fractal, sure, but I don't think that most people really understand what the implications are when we say that the market is fractal. When people say the market is fractal, they think, yes, there's a high degree of self-similarity, so what you do on a short time frame should be able to work on a higher time frame, and that's not the consequences of a fractal. It's not. Really, the big takeaway that you should get when you hear that markets are a fractal is that makes it extremely difficult to predict, particularly on short time frames. I would use the markets wheel R here, but reverse. Prediction window is really short. I think you're probably right, Lucas. I've been doing a lot of work trying to find short-term predictive signals, and so far the conclusion that I've been coming to is that anything that is really truly, like, it really has a really good predictive nature, and I'm talking like you're gonna get 70% on an equal risk reward ratio, that they tend to be very, very fast, and you have to use a lot of tests. Like, there will be like the trigger thing that you look for in the order flow that gets it, but you also have to consider all these other things about the market before you can take it. Sure, it would be blunt if the technicals. So what he said is technicals tells appear on all time frames. If they did not, multi-time frame analysis would not be a thing. Wrong. Technical analysis is a thing, not because it is effective, but because that's what people want to believe. Because it fills things in people, their desire to see patterns in things. There are a lot of things in this market that are done and pushed and have absolutely no proven efficacy. And that is the nature of the industry, and it has nothing to do with their effectiveness. There have been so many academic papers, and I mean literally hundreds of these academic papers trying to test specific technical edges. And I have never seen an academic paper that straight up came out and said, here is proof that technical analysis works. In fact, it's always, here's the most popular technical analysis out there, and here's why it doesn't work. Right? And you got these, so then people will say, yeah, but there's like these technical analyst certifications, and like banks hire technical analysts and things like that. But that's because they need to sell to their clients. It's not necessarily because they use it. And that's where the thing that gets interesting is that the large firms pretty much avoid the majority of that. The only predictive signals that I've seen confirmation of them using are short-term order flow signals. Seth, pattern recognition doesn't work all the time as well. Yeah, so I'm just saying that the idea that because it's used does not mean that it's effective. And you, as a trader, should absolutely never take a trade unless you have some degree of empirical evidence to suggest that it actually works. Well, TA is a series of checks and balances used to validate the direction. Well, but that's where I'm getting back into, like, you got to understand autocorrelation, right? So, and what is meant when we're actually talk about, like, is there a high degree of autocorrelation, right? So in this market right now, there's a high degree of autocorrelation. This market today, in particular, a high degree of autocorrelation. But if you go back and you do these back tests over a long enough time period, you will find that autocorrelation is not an effective predictor of the short-term direction on a 1-minute basis. That's just the results of the studies that I've done, at least. So you kind of have to, that's where I'm saying, like, it really comes down more to knowing what future order flows are likely to look like based on the fundamentals, and then crafting setups that will take advantage of those the best. And that's where I think technical analysis can still be useful, is because you can use technical analysis to quantitatively express the behavior that you're looking for. But if you go for any one individual behavior and try to look for an edge in that behavior across all markets, and since the beginning of time, it doesn't exist. Straight up, I don't believe that the Holy Grail exists. I appreciate your vast years of endurance. Well, I tell you what, I've been doing this for I've been involved in this industry for over 10 years now. That doesn't mean that I know a ton about the way trading. I just know these guys that are doing it for a living professionally, they're not. The way they're trading is completely different. It's almost not even relevant to what we do. If you're searching for one Holy Grail indicator, you will not find it. Well, no. I think that what you will find is that the best strategies will have particular markets that they work well in and markets that they don't work well in. And you're going to have to know what kind of market that is. And it's very difficult to quantitatively express that sometimes, especially on the order flow bit. So like the biggest dichotomy that you will see in order flow is that there will be order flow where when you get a large order at the high of the day or whatever it is, that will stop it, and that'll be the end of it. And then you will have order flow where anytime that there's any kind of wall, they just blast right through it. And how do you know which one is going to be which? I've found in the treasuries that it is particularly difficult to know. But if there's any one thing that has shown some effectiveness in the past, it is knowing what kind of market you're in. Well, I tell you what, I'm pretty upset about if that one doesn't work out, but which is more mathematically liquid, ES or NQ? Well, if we're just going off of the straight definition of liquidity, then the ES has more liquidity. When old resistance ideas fail, they fail big, yeah. Well, and that's another thing is like, is the thing that you're looking at, if it works, why does it work? Does it work because there is a mathematical property about markets that causes a certain behavior and your strategy is able to take advantage of that behavior? Or is it just random happenstance that's been happening? You know what I mean? And then even then, is it random happenstance that if there really is a pattern that it hasn't been taken advantage of yet, right? Because the whole thing is that if it's an actual mathematical property of the markets, like the squared power law. Great example. The squared power law happens because of the way that a limit order book market works. And so any edges that you might be able to gain from that may be arbitraged out of the market, but that squared power law will always still exist because it's inherent to the market itself. It's inherent to the way that the market is set up. If you change the rules of the market, then maybe some of those things can change, right? But if you're just trading, like something about like a moving average or something like that, a statistical aberration in the market, it could just be random. And if it's random, the chances, if it's random, then that means that once you start trading it, it could just go away. That the execution cost of you trading it will just make it go away. What is liquidity? So when we're talking liquidity, what we mean is how many limit order contracts are available out there. So there is two types of liquidity. There is the visible liquidity that we can see here, where there's 100 and 150 contracts at every price. And there is latent liquidity, which is that, I will only see 50 contracts placed here at any one time, but I can see now, because of how much is traded, that there's actually a several hundred orders willing to buy at 38.16, the latent liquidity. But when you look on NQ, the number of contracts that end up trading at any one price is several multiples higher in the ES. The old correlation behaviors have been eliminated in a random chance of parabolic. I'm not sure what you mean by that. Anyways, but the thing that I was going back to is that because the opportunity cost of your execution on average is going to lose money, then if there is a statistical aberration in the market, trading it is going to make that statistical aberration disappear. And if it's and that's the whole thing is that if it's like a really small statistical aberration, that it really is possible that just one person trading it can make it go away. That's why when I say, like, if you're backtesting something, like, there are certain performance metrics that you probably want to reach before you try taking it. Because if it's less than 1.5, the chances of it just completely going away are a lot higher. Right? Now, I gotta say, I think that this is still tilted to the upside, but it looks like that they're gonna be, like, difficult about it and before they do it. You know what I mean? I do feel that the order flow that we're seeing today is a little bit different. So I'm seeing a little bit more traded at individual prices. There's also, in days past, we've had situations where there's a pretty good turn down and then it recovers and goes higher. And I guess we saw a little bit of that today, but it was only like 2 points, So it seems like that the buyers are much more willing to hold it here, but they, as of yet, are unwilling to bid it up into new prices. But no one willing to execute on ES tick for tick there, more 3 to 4 times more dollars. Well, let's see here. I don't think that judging liquidity by number of dollars being put into it is necessarily a good measure of something. I'm gonna pull this up. So one of the big things, though, that you have to consider is that liquidity is not volume, right? There are some instruments out there, like gold and oil. Probably oil is a really great example. Oil does not have a really significant amount of liquidity, but a ton of volume trades in oil. It doesn't. Sorry, guys. Do we have to go through what the definition of liquidity is and everything you hear again? Okay, I'm sorry, but 9 contracts per price is very different from 200 contracts per price. Do you understand the... Wait, let me put them next to each other. Do you understand the difference between 200, 376, and 4? Well, I'm not being very fair there. This one, there's about 50 contracts on the inside, and in oil on the inside, you're maybe going to get, depending on if it's a mid-price or not, 4 contracts or 50. But then, like, look at how much it declines when you go past those first 2 inside prices. You're getting like 9, 7, 8, and on some of these, you're getting 150. Right? So the CL contract in particular, I've never looked at the Brent and W. In fact, I don't even think that I get that one. But the CL contract in particular is an instance where the amount of liquidity that is available at any one given time is not necessarily high. But, big but, it trades a ton of volume. So there is a lot of latent liquidity out there, and there is just a lot of trade overall. It goes back and forth a lot. It's like crack. So I believe if we come over here and look at it, let's see here, CL futures. Yeah. Well, okay, so maybe not anymore. On a strong day, on a strong day, the CL contract will trade around 1,600,000 contracts, whereas on a strong day in the S&P 500 right now, they'll trade 2,130,000 contracts. I have seen days where more contracts were traded in oil than were traded in the ES. It's happened for sure. Now I need to look in here. I don't think that they're going to come out. Let's see here. So I'm wondering, should I use the span margin requirements to calculate how much money is being put in, or should I do the intraday? Let's just go over to AMP here and see. I don't think that there's a difference between them, but we'll double check. Margins. Let's short something. Or no, maybe this flips back down and, take us by surprise. Okay, so ES is 400 and NQ is 1,000. Oh, okay, so nope. It's close though. So if you were to use the intraday margin requirements, then it's still more money contract on a volume basis in ES than it is in NQ. They pull up FX and that's the biggest market. Well, if you want the biggest market, then you would want to go and look at bonds, right? But you're right. It's FX, but it's not really valid. It's not really a fair comparison because that is banks trading money across these to do transactions. And the banks don't trade it on a limit order book. So we're talking about a completely different game at that point, right? It's a liquid market, but it's not. It's not a limit order book market. You want to short everything. I do find it a little funny that you get this thing where like pre-market it just goes and like there's no stopping it, and then the regular session comes along and it's so difficult. If you trade spot FX, it is. No, it's not. That's not even the same thing, dude. Oh, well, sorry, are you talking about spot FX futures? I guess if you're talking about like the spot FX futures, it is a limit order book, but those don't behave like the same way because the majority of the market transactions are happening between the banks themselves, and that moves the market. So yeah, okay, trade FX spot. But I mean, most FX trading that you're gonna do, they're just gonna give you a best bid and best ask, and you can choose to do a market order into them, and that's it. And there's not an order book that you can go and look at to see how many orders are sitting there, you know, a dollar, you know, how 5 pips or whatever the minimum price fluctuation is. Yeah. If you say so. All I know is that if it doesn't have a depth of market, I'm not going to trade it. I feel like you're arguing just for the sake of arguing. Why does it fucking matter? Let's see here. I'm missing something. Oh, no, it's over there. What the... I guess so. If we were to go back to the oil thing, if I were to just, show you as an example. Okay. So like, oh, that's the wrong one. I needed to do April. There we go. Okay. So the available liquidity is pretty light. You do get some prices that are like 60, 70, but you notice that those like pull and move as it moves up and down, right? So, but then there's the latent liquidity, right? So the real question is like, how much actually trades there before the price changes, right? So in the ES, you can see there that at some prices, their latent liquidity is as high as 500 to 1,000, right? And once you get over 1,000, then you're starting to talk about iceberg orders, which is probably, I would say is a different thing. But do you get that in the oil? Like, not really. Like, right? The number of contracts that you can acquire at any one individual price on the CL contract is a lot lower than the ES. Why is that? Because the liquidity in the ES is higher. And the most liquid instruments are going to be the treasuries and then the ES. Now, one of the big things that impacts the amount of liquidity that is available is the minimum tick size. If we went over it to the NQ and we changed the minimum tick size so that like the minimum tick size was like a whole NQ point, then that would probably increase the amount of liquidity available in NQ. And there's a couple of other things. There's been a bunch of research on this, so there's a couple of other things that you can look at that affect the amount of liquidity available in the market. And what's the average price change to? Because you can't make money on one tick. Well, I guess where it becomes relevant for a large trader is that the execution costs are going to be higher for you, essentially. It means that your large purchase could have a potentially larger effect on the market. So the general so again, it's a squared power law, right? So it's the square root of the quantity of your order over the volume that's traded on a daily basis. Something of that nature. And that formula kind of changes a bit based on the specifics of your market and so forth. That being the impact that you'll have on the market. So you could sit down and you could say, I think that there's going to be a move. I don't necessarily think that the ES is going to move a higher percentage than the NQ. They're going to move the same percentage. Which instrument should I take it on? And depending on the size of the order that I'm looking to produce, I could go and I could run that formula on those markets to see which one I will have a smaller impact on, and therefore have smaller execution costs, right? What I'm attempting to convey is FX has a wider spread. Well, that's probably true, right? So in FX, it's usually not the difference between the best bid and the best offer is more than the minimum price fluctuation usually, right? It's kind of funny. You have to get Bitcoin. Bitcoin is the only one Bitcoin is the only CME future that I have looked at where there is like a true spread, which is a subject that is going to matter to us at some point, right? Because here in the next year or so, retail traders are going to be getting access to full depth of market data on NASDAQ stocks. And then you're going to go over those and you're going to look and you will see that they don't have liquidity at every price in stocks. And that you can jump the queue essentially by offering a better bid. Okay, so Bank of Canada is saying a bunch of stuff here. I totally forgot about that. Usually doesn't matter to us, but there's also the NAHB Housing Market Index 83 versus expected 86. And the next piece of news that we're looking at is the auctions in 90 minutes. So sometimes this might be the wait for the news and then it goes sort of a thing. Yeah, in fact, I think it is. There's very often what will happen is they will be constrained because there's a certain piece of news that they want to wait for first. Then once that piece of news is over, it doesn't matter what that piece of news was. Then they go and they make the trade that they wanted to make all along, which tends to be long. Oh yeah, I think that they're probably heading for the all-time high for sure. I mean, at this point, it's so close that it would just actually they're already past it, aren't they? Yep, they are. It was 84 and a quarter, so they just barely passed it there. But it looks like they're going to go for quite a bit more than that, even so. I don't know if they'll hit my YOLO target, but prove it. Sugar says it takes 20 times more to move the affect the NQ than it is to affect the ES. The same move if you have a huge order. Do you have empirical evidence to back that statement up? Especially, I would hope that you could calculate that for us. Especially if you have you can tell us that it's 20 times. Takes 20 times more the move, not to move. Well, are you trying to say you make more money trading the NQ on a move of a 1%? I don't know. If you knew that they were both going to trade, so did I say that if you knew they were both going to trade, that it would definitely be the S? I don't think I said that, right? I just said that you could calculate it. The issue is going to be that, like, well, so if it's a 1% move, you could trade like the same amount of money per se. But I don't think that you would necessarily want to use like the margins provided necessarily to set the number of contracts that you're willing to take. I think that instead you would trade the number, like what your risk is. So you would say, here's the risk and here's the average volatility and everything else like that, and use that to determine your stock. And so the result is that you would probably trade less NQ relative to ES because its tick size is larger and it moves more, and because the margin required is larger and it moves so much. But I don't know, like you would really have to do the math, right? Sure, but that doesn't matter. The average move on ES is 40 ticks. The average move on NQ is 1,700 ticks. But the NQ does move more, yes. But that's exactly what I was saying, is that that is why the ES has more liquidity, right? They could change that by not making the NQ be quarter of a points, right? They could change it down to be 1 point or even 5 points, and then you could probably get close to the same amount of liquidity that the ES has. You just change the contract specifications. I traded FX with 9 pip spreads. They were so low and people are lucky. Well, I mean, this is just, you're just explaining, the sorts of things that I hate about FX. Coming over here, trading the treasury, I might see a gap of 1 tick and that's it. There can be slippage on stop runs, which is another thing. So back to what Sugar Daddy was saying, if you're a large player making a trade, right? So again, the scenario we're saying is we're expecting a move up in the indexes. We don't expect the NQ or the ES to move more than the other. So we could trade in either one. Which one do we pick? Well, with the tick size is not necessarily directly a factor. Or sorry, the amount that it moves, the average move size is not the direct factor that we look at. Okay, because if we're going to trade the NQ, because of that, we're going to trade less contracts, relatively speaking. Because if it moves to, well, that's not true. We just did the math on it. That's why I said that tick to tick NQ has 2 to 3 times more money given the margin required. No. See, what you're thinking is this. If I trade one contract and I put the trade in the ES versus the NQ, then I'm going to make more money on the NQ. True. One contract. True. But the amount of risk that you're taking on is much higher as well. So if you are a large player and you are going to be trading, it's not going to be one contract. It's going to be, you're going to set up and say, what is my stop? And you're going to make it so that your stop would be the same regardless of what instrument you traded. So you would just trade less NQ contracts than E-mini contracts. Okay. So then the risk reward on both of the instruments is going to be essentially the same. So then the question is still, which one do I want to trade on at that point? Because they're supposed to move the same amount, and I've equalized the difference between the two of them on a contract basis. One of the big factors that you're going to consider is going to be the execution costs of having to acquire 1,000 contracts or whatever the deal is, right? And that's where I'm saying that the more liquidity that is available to you, the less that your execution cost is going to be, is how they think of it. And that's why the instruments that are popular, like the 10-year treasury, Well, I'm not going to say that the 10-year treasury is like hyper profitable or popular, but the times when it is, it really is popular, right? Why? Because there's so much liquidity available. They have less execution costs. Pick the one with the most movement, but can handle the one with those volatile moves. Yeah, I don't know. That's just where I'm like, what I get into is like most people sit down and they say, okay, well, here is a move that I wish I traded. And here's how much I would have made if I put one contract on ES, and here's how much I would have made if I put one contract on NQ. And then they go, oh, well, I can make way more money on NQ, so I should go and trade that. And that is just such a terrible way of looking at it for a retail trader, because, it's going to be your risk. It's going to be so much more risk, and this is why I believe that, well, not only that, but NQ just has some volatility involved in it, right? So you get a lot of people come in and trade NQ for those reasons, and then they just get destroyed. And then because they were trading NQ and taking on more risk, they lost more money than they needed to. CNBC headline, Mark S&P 500 gold rises to all-time high ahead of Biden's inauguration. I don't know if that's what's going on here, but when I look at the overnight action, I think that probably China putting some money into the system. And then when I look at the move in the morning, that just looks like somebody acquiring some contracts. And then this open is just like them testing the open. But I think still that the biggest drivers in the market are going to be, one, earnings, which apparently so far have been good, right? And two, the ramifications on the market from Joe Biden's executive orders. Now, number two is not going to be as strong of a factor because probably that's mostly factored in. We have a pretty good idea of what Joe Biden wants to do, right? It's not a test, it's a suck. Well, no, why do you say that? I don't know. So just when I look up here at the E-mini, right, like they're trading a good amount of contracts at each price. I don't think like the pace of the market is super high, so I'm not going to say that we're having like an excessively high volume day. And the cumulative delta change since this continuation up higher is only about 3,500. So it's not like a crazy imbalance or anything like that. But I just kind of look at it and I'm like, this is healthy trade, and bidders are pushing through sellers. This is, when I was saying in that order flow, this is that, what just happened right there at 38.30, the perfect example is you'll start to get this order flow where every time that you start to see absorption, they're going to bid through it. And any time that you see absorption on the bid, that could be indications of like level breaks coming. I think in that case, it's probably not the same thing because that was after the move up already happened. But so I'm not 100% sure what to make of that 1,000 at 38.31 because I've never tested that before. Markets move higher, lower, and high volume, low volume, or liquidity. Yeah, well, so think about it. So the way that I would think about higher or lower liquidity on an individual instrument is if I'm looking at the ES and all of a sudden I'm noticing that in that location, the liquidity is less. And here is again where you really have to factor in the difference between available liquidity and latent liquidity, because the available liquidity is not going to vary that much, especially not in the ES. It'll vary between like the summer and the rest of the year. There is more available liquidity outside of the summer, for instance. We have seen like flash crashes where the available liquidity like just completely disappears, right? But that's why these inside columns in Jigsaw are so important, because it really gives you an idea of what the latent liquidity is. And to really understand the behavior of the markets, like with the square power law, the only way that they are able to explain the square power law and model it is by modeling the latent liquidity, right? So we want to see what the latent liquidity is. So if I start seeing up in here, like say at 38, 34, that we go through there and we trade this whole area through here on only 20 contracts each tick. Okay, so the overall liquidity in that area was less. Why did that happen? Okay, well, to me, in this situation, that means that the people that were offering sell-side liquidity, which are hopefully going to be people that are just taking profits, have decided that they no longer want to provide liquidity at those locations. And why is that? Well, most of the time, I'm going to say most of the time, it's because they believe that taking it there would be taking it against informed trading. So they pull their orders, right? So now you get this idea of where do they want to execute and not want to execute? And if it changes, why did it change? And that's why we watch it. So here, the thing that I think I'm going to be paying attention to here is like, are we going to come into a spot here? Like right now, see, here was this. Need a little bit bigger. Here's this little profile right here from just before we pushed a little bit higher. So far, we haven't really, well, I should draw it over on this one. So far, we haven't really created a really strong profile spot yet. But you can see that there's like this dip in liquidity right here, right? So there was people who were probably selling through this area and buying through this area. So there's one right there. So then we're going to ask, are we going to get another one around here? I think is where it's going to be. And why do I think it's going to be there? 38, 32 in particular. Because that is the spot where they're not offering a lot of liquidity in the middle of it for some reason. So we could rotate. We could rotate around this. I'm not sure I have enough to really know if that's what's going to happen yet, but that's the sort of thing that I'm looking for. And then if I do get that, then I have to start asking myself, okay, well, is it like fairly valued and balanced there? Or do things like the expected move from the VIX and my positioning model tell me that there's more to come? Well, my positioning model says that they maybe they want to take a profit. I'm actually going to put one out there just kind of in case. I'm not necessarily saying that's what I want to take though. Okay, so the expected move is 38, 32. I should have canceled it. It's okay. I wanted to take it if they like rushed up into it. Well, if they do, I can take it back there again. Doesn't matter. I still took one trade and it turned out good. And I think my robots overall have a realized P&L of 863. Wait, how did they get 863? 4, 6. That's 600. 1,000. Oh yeah, okay. 380. When you factor in the, like the commissions and stuff. I guess that's okay. Here again, if I just added like higher time frame signals on all of these, probably all these losers wouldn't have taken one. Do we extend the secular bull from here? Do we correct somewhat before run? Yeah, I don't know. Like, here's the thing: is that at this exact moment in time, I do not feel any strong desire or need to adjust any, like what is my reason for taking making an execution on something that I intend to hold for a long time right here? The treasuries are making me a little nervous here. What's the dollar doing? Dollar pulling back substantially. 6J moving as of late. Last 30 minutes. Gold turned up and moved higher. I don't know. So I think that what you do is you, like if I was like making a longer term play, I'm thinking we let Joe Biden do all of his executive orders and we let some of the more significant earnings come through. And then maybe we make a decision on what we want to do. Yeah. I find it curious that the treasuries are pushing here, though. Well, if I hadn't taken that exit, I mean, right now with it where it is, I'm like, oh, actually, it was a good exit. Maybe it was fine. But if I hadn't taken that exit, would I be like holding on or would I be getting nervous here? Well, there's that 28. That if below that 28, then I kind of start to wonder. Yep. Marjorie Taylor Greene, here's the warning the GOP needs to hear. The vast majority of Republican voters, volunteers, and donors are no longer loyal to the GOP Republican Party and candidates just because they have an R by their name. Their loyalty now lies with Donald J. Trump. Well, I'm not sure if their loyalty explicitly lies with Donald J. Trump. For all of those people, probably for maybe half of them. But I do think that they have basically said you're either going to be 100% true to the principles that we're electing you for, or we're not going to elect you. And for far too many Republicans, that has not been the case. Policy decisions are due from Brazil and Canada. Bank of Japan and ECB delivered decisions Thursday. Oh, I didn't know that they were doing the one tomorrow. Wait, was that on my thing over here? Because there's been a bunch, this is something that we haven't talked about, but I guess that's because I don't know what else to say about it other than the piece of news is that the Europeans are basically doing yield curve control. Oh, yeah, it doesn't show it to me because I don't have the ECB turned on. I don't have the euro turned on, but if I turn the euro on, then I get all these other ones. Yep, ECB press conference 8:30. Oh, it's 8:30. That's interesting. In the past, the press conference has been at like the top of the hour and it goes into the ES. Now they're going to let the indexes be open for an hour before they do the press conference. That's actually, oh no, wait. No, that's Eastern time. I just have my time zone screwed up. Mountain time. I do think it is still a different though. There we go. It fixes that. 6:30. Oh, so it's 30 minutes earlier than usual. Or is it? No, maybe it's not. Maybe it's the same time. Maybe it's always been an hour. Yeah, I think it's always been an hour. Well, I'm thinking back on my performance today. I don't know if the way that I played it was like the greatest trade or anything. Maybe if I had been bought like at the beginning of the session and was hanging on. So I'm going to say like I made money and that there wasn't anything special about it. Yesterday when I got done and I looked at it and I was like, that was a tough session, and in aggregate on direction I was kind of wrong, but I still did really well. And so it seemed like a lot of the things about the market that kind of my approaches were kind of helping. Today I'm like, I'm not so sure. I guess I did correctly see the opportunity for a slight pullback here, though, so that's great. Should I try and take it long again? Well, let's see here. I think that, like, the festivities start at, some of them are already going on. So, and I don't know. Does the market react during the inauguration speech? Probably, but I personally don't see it as a huge opportunity for me. Oh, that is an interesting thread. I need to read this. That's on Twitter. We tend to take many things in trading for granted, and I think that liquidity and price discovery are two things we rarely think about. But let's imagine for a second that we trade E-minis, but we can't see real-time price. And when we call our broker, she quotes us a 1% bid-ask spread. Obviously, we will not be able to trade like that and make money. This is why price discovery is crucial for practitioners, no matter whether they are large hedge funds or retail investors. Luckily, in normal market conditions, we are awash with liquidity. Most liquid assets are trading at the minimum bid-ask spread. But as we all know, there are no free lunches in financial markets, so you probably ask, where can the downside for the deep liquidity that we get? Well, the reason that we as market takers get such deep liquidity and minimal transaction costs is because our orders are valuable for market makers, banks, large high-frequency trading firms, dealers, brokers, etc. So they are willing to do anything to get this information. Think about that app that you have on your phone. The reason those services are free is because our information is more valuable than any subscription cost. Same goes for our orders and order book distribution. This information asymmetry, in essence, when the market maker sees the entire order book picture, they pretty much have the treasure map, as we can operate with very little surprises, and occasionally they can front run clients' orders. Now you probably think, that's not really fair. If they have my orders, I'm giving them a free option. Well, you are kind of right, but otherwise they will be reluctant to show liquidity. Think about information asymmetries that sometimes market makers tend to go on the borderline between front-running clients' orders and price manipulation. Back in the early 2000s, two large scandals in FX and LIBOR markets set precedents with regards to price rigging. So nowadays, dealers try to avoid that. This is kind of veering off, but I'm going to finish reading it for us because I'm not going to read that much and then just stop, right? When you are sitting on the sell side and you know that there's a large barrier stop trigger close to the market, it's pretty easy to drive the market to that level. Okay, but they don't know that necessarily. You can guess based on where people took their orders, where stops might be, but the idea that is kind of a little that could be misleading. It's easy to drive the market to that level. Had one or two occasions with a large U.S. bank that hunted my triggers back when FX was volatile. Okay, how do you know that? Dealers will actually go a long way in sourcing information about our trades and orders. Some dealers will show a very tight bid-ask spread just to win a trade, as this trade will help them with their price discovery. Think about the following example. Jim is an expert SPX volatility trader, and his dealer knows that when he buys gamma, it tends to perform, and when he sells gamma, the market just gets stuck in a range. Given that Jim asks for a two-way, the dealer has no idea whether he wants to buy or sell. To win the price, the dealer is inclined to show a choice price just to win the trade. That didn't make sense to me, but okay. Now you ask how all this is related to volatility. Well, order book information has everything to do with volatility. When you look at squeeze metrics, you're basically sourcing order book information using publicly available data for your trading. When we as a herd act based on that information, we create volatility. Assume that we had zero information to base our trading on, and I doubt that we would have seen that kind of volatility in price action. To some things, liquidity and price discovery is a double-edged sword. While it makes our trading more efficient, we end up paying for it without realizing that. I don't know if I completely agree with him on every point that he made in there. I believe that the information that you get from the order book is not as is not as prescient as he's acting like it is. Plus, we pay to be able to see the depth of market. Yeah, what did I do to my chapstick? It's not here. Oh, well. Trump revokes his own lobbying ban for former officials. Oh, geez. Well, why not? You want your loyalists to be in the lobbying industry now, right? To try and have that impact that way. It's really the politicians that should be banned from lobbying. Okay, so we did recover that. If I had taken my buy down in here, it would have survived. Reuters says Europe Inc.'s fourth quarter reporting season will test investor confidence and profit recovery as a new round of social restrictions is expected to have driven earnings down more than 25%, while further blurring the outlook. Alligator says a bit surprised by this surge. Yeah, I'm not sure I get what's going on in the Treasury today. I don't know. I keep thinking about this move in the ES, and we took it and everything. I actually think that there could be more in it. I just didn't want to deal with that pullback. I probably treated it as more significant than I needed to, because at the moment they're sitting there at the high, maybe about to break out to 38.34. And overall, aside from a little bit of, I don't know, wrangling around at the open, this thing has just been on a straight line higher, practically going parabolic almost. And I don't necessarily see a direct driver for it at the moment. But that's just the way the market has been. Yeah, that's kind of weird, because remember I came in and I said, well, because of inauguration, I'm not sure that this is necessarily the best opportunities for me. I'm reading the Supreme Court is, oh yeah, I saw that, but I decided not to say anything about it. What do you think VP traders P&L would be? What do you mean? You mean what, the robot that I made yesterday? I actually don't know if it would have taken a trade. We could find out. No, you don't need to delete the comment. I didn't mention it because at the time it was just a bomb threat, and the Supreme Court was saying that they weren't going to evacuate, and the market hadn't reacted to it. So I just kind of said, well, I guess it doesn't matter to us at the moment, so I'm just not going to say anything. Step. Where is it? Step in profile. Use targets. ES. Just today. Well, I guess I have to include the previous day too. Include commission, tick replay, and run. This shouldn't take too long. Block sell at 29, huh? Well, that was a pretty aggressive there at 29. Forex Live says big risk rally. Well, looks like it would have made money. The question is, well, that's probably over the past 2 days, so. Trades today. So would have bought on one. Oh, that exit on session closes basically. It would still be in the long, because yeah, it certainly would be. But what we really want to look at is the chart here. Right? Oh, really? Curious. 38.14. 75. It's right there. That's correct. So you see that one right there? I guess it's changed since then, and it did have some adverse excursion against it, but it took that step right there. Oh, actually, I'm not sure that's... Oh, that's kind of interesting. I think that this part of the profile probably developed before, or sorry, after it took the trade. Anyways, so it took that one and it let it get to its profit target. That one it probably could have let ride a little bit longer. And then it took it again over up in here. That's it. Funny that it took a short at 38.28. 24. Yeah. But see, this is where I'm saying that, like, let's just try it. ES, Ninja Script Editor. Step in profile. So I have here that it has to be, the HMA is falling. And my HMA is a bars array of 5. But what if I just said this is a 200 moving average, which I know on... Oh, was I supposed to do this on 5-minute bars? Oh. Oh. Okay. You change this to be close of 0 is greater than HMA of 0. Okay. I just want a shorter scalp. Oh, don't like that. Oh. My HMA of 0. I always make that mistake. Gold bounces back above key technical levels as Bitcoin tumbles. Wait, is Bitcoin tumbling? Not particularly. I mean, it's down, but it's not like it's crazy or anything. I guess it is a lower low. Certainly the technical traders, that sort of thing upsets them. Okay, so let's just remember that the profit factor was 119 and 108 in case this bit thing doesn't work. Oh, you know what? Also, this should be one tick. Okay. So they did make a new high, but it wasn't particularly strong. At the Biden inauguration, Cruz is posing for selfies in front of the U.S. Capitol. I'm not joking. Yeah, this is ridiculous. Oh, much better. So it took 6 trades, but it got 66% win rate, and yeah, that did well. That improved it by a considerable amount. Let's go back and look at the chart and see what it does now. Oh, that's it's a one tick chart, so it's like really almost impossible to look at the chart. That's funny. That is pretty freaking funny. Oh, hey, so there you are. Oh, I took a long and it worked out. And then I don't know, people were arguing with me about stuff and understand what they were trying to say. I kind of felt like that it was one of those things where it's like you say one thing that sounds wrong to you when you argue about it, and then anyways. So then somebody asked a question about that robot, so I just went back and made a few changes and retested it again, and it was pretty okay. Or at least we made it better on the past 2 days. I'll go back and, later today, I will try running it on the whole caboodle. And I'm also gonna take a look at just adding a longer term moving average to some of these other trades to see if it improves them. Because it is pretty iffy. A lot of those. I'm wondering if so one of the issues that I got is that, like, if I'm only using my trading session and then you use a moving average, it can't, I don't know how the way that the moving average will react to that is kind of iffy. So I'm kind of wondering if what I need to do is test it over the whole trading session, but only allow it to trade within that time period, which means that it takes a lot longer to backtest, but so that it does the right thing with the moving average. And this one, it wouldn't matter because we're using the instrument 6. I also point out that it made 3 trades a day. Well, how many were today and how many were yesterday? Basically, it took 2 trades today. Both winners, but you can avoid a lot of orders by adding a condition if there's no order open. Well, I do have that in there. Did you see? The bottom I said if you don't take this if you're already in a position. So it won't like get into one and then see the opposite signal and take it the opposite way and do that a bunch of times. That's interesting. I kind of have to, here's the thing. When I'm looking at my robots today, like they did make money. Don't get me wrong. They've made money so far. But like these right here were dumb trades that make no sense. So like, I kind of have to question that at the very least there are some enhancements that could be made. The question is just how do you enhance it to be able to deal with today's situation versus any other day? Because like maybe a 200 period moving average isn't good enough, right? No, I didn't trade it with a live account. So I'm still thinking about so I have money in there. I could potentially trade it. Like the day that I decide to trade it, I could start trading it. I have a little bit more saved up, so there's kind of this thing of like, well, maybe I should. So I was waiting and thinking maybe in February or March I could move and try to trade edge clear. But then there's the whole robot thing. So now I'm thinking maybe I need to move over to NinjaTrader. And I could potentially try to move over to NinjaTrader right now. Like I could just start moving, But I don't know, man. Tough call. Oh, really? That's funny. Well, I don't know. Like here's the thing for me, on that sort of a thing, or where I'm at right now, and I kind of want to go into this just because I'm, I guess I want suggestions. I guess because here's the thing is like, some days I just feel bored. Last night I worked out a little bit and then I watched some anime on TV, but like this is just ugh. I had to stay late at work. There was a production issue. Anyways, normally I'll have like some sort of thing that I'm working on. It used to be that typically it was a video game, It was like I'm trying to get good at that video game. But I just haven't had games that have really caught my interest. So then it's like, well, what you really need to do is you need to have more work hobbies, So then I think about, okay, like what sort of risks have I done? What sort of things have I done to try and grow the business? Because the trading thing is great. And, the goal is that we should make money on trading, or at the very least that we're getting better at trading. And I think that is happening. So I'm happy with that at the moment, especially the past week or two. But I also feel the need to, be working on other things at the same time. And so really the prudent thing to do is to spend that time on you guys, to building the YouTube channel and making the YouTube channel better. So that's why I put a significant amount of effort into making it so that you guys could use the indicators and making those available. So I did that, and I think that that's working very well. I'm not to the goal yet. So the goal was to be able to use Rhythmic API Plus and start like building a platform. We're not there yet. So what's the next thing that I can do? Well, I could start promoting writing stuff for people. Like that one kind of, there's some like real downsides to programming stuff for people, especially since a lot of the requests that I get these days are really dumb things. But we could move into that. But I don't know. I feel like I want to have more things where I can take risks, but reasonable risks, and have a little bit of variety, just like a new thing. That's all the time. How many live trades are you taking? Well, so again, I'm not taking like live trades right now, but like today, the robots took 1, 2, 3, 4, 5, 6 entries, and my discretionary trading, I took 1 entry and was a winner. And overall, I made more money than the robots. So that might just be chance, but I did better than them today. You're welcome to write a daily loss indicator. That actually exists already, Tommy Lawrence. And if you go to I will show you guys. If you go to the NinjaTrader ecosystem user app share, ninjatraderecosystem.com/user app. And you know what? Every time that I post one of these, you guys just ask me for the link, so I'm just going to post it in here. So if you come in here and you sort it by like date added, I think. Oh, that's a new one. Oh, you know what else is? I think I need to show NinjaTrader 8 strategies. Yeah, you see this one right here, account equity guard NinjaTrader 8 strategy. So if you go into that one, you can see that there's a number of, well, I mean, you can go and you can look at the code for it and everything, but basically what you do is you put this on and it will stop your other strategies from trading if you break your risk limits or whatever the deal is. So I think we could go and we could make a little window that allows you to control this sort of stuff a little bit better. That might be something, but I think that this basically gets a job that you're looking to have done. So yeah, there you go. So let's look at these two other indicators that are new. A little label to label the bars. Okay, don't care. Mesa stochastics. Yeah, okay. I already have that actually. How about a market by order indicator for bonds showing pulling, stacking on orders greater than? You can already do that with the indicators that I have on speculatorseth.com, yeah? So here what I'm doing is, well, I mean, there's kind of a couple of different ways of looking at it, but this just shows you what the largest order was during that time. So you can see that here in the ES, there's like a bid that is moving around that's like 250 lots, and there's not nearly as large of them removing, but you can see sometimes, and this by the way will happen a lot. So you see how like you got on both sides there, big order moving on both sides. It's because it's just because the guy, he moved it. And then yeah, and then I can split it out between offers and bids. So yeah, and then the other thing is the market depth tape will show you stacking and pulling, and you can filter that. So those are two things that with the speculator Seth indicators probably would get what you're looking to have done, Octavius. I guess now is a good time to point it out. Like, first of all, if you're new here, I would recommend not just subscribing, but hitting the bell icon, because the bell icon ensures that you get notifications for every video, and that is more appropriate for our channel. Basically, like when you come to YouTube, you're going to want to be able to see, is that streaming? Did you have a video today? What was it? And even if you don't watch it, you want to at least know what the title was and what was going on, right? So that you don't miss anything. So clicking the bell icon helps. And then I have indicators that are available. If you subscribe to the channel here, there is you click the join button down below the video, and you can join the elite subscription tier. And then that gives you access to my indicator suite that you can download at speculatorseth.com. And you can go and download that indicator suite and try it for 2 weeks for free first. How many voices argue with themselves inside your head? Just me. When I'm streaming, pretty much everything that I'm thinking I say out loud. It's all just me. Oh, do I need to? I kind of touched the thing so it's not. Oh, look at that. It took along there. You make sense, so YouTube. Now they're not. I want to be very, here's the thing. We were talking yesterday. I think there was an important thing about the whole YouTube thing that I didn't say yesterday that's really important. On one point, I am concerned that people, including myself, could potentially be removed from YouTube without valid justification. At the same time, I very much want to follow their rules. I don't want to be. I think that their rules are fine and acceptable, and they can choose the rules that they want. But if I was running a platform, I think that that my rules would be about online with what they're asking for. And so, you know, I try to be really careful about what I'm saying and not get carried away and say something that's wrong. So, but I don't think that we have, and I think we're okay on that point. We just got to be a little bit careful when you start talking about politics, right? Can you find a good? Well, the issue with recommending you a divorce attorney is that you don't live in Utah. It's really a state by state thing. So I guess this doesn't fit Ace's it's kind of I'm kind of wondering why Ace was saying that he could go long here, but I think that Indy in particular is taking if the Indy trade ends up working out, this is the place where I think it would do it. Oh dear, we didn't I know, I think we're okay. Yeah, Bitcoin is not doing very hot. Anyways, what was I saying? Oh yeah, earlier I was thinking about, what are the things that I need to spend more time on, essentially. So if you have ideas on fun ventures we could do that would give us a little bit of variety, I'm all ears. From one of the things I see from time to time is certain streamers or people that I'm looking at, they're like, here's an idea for programming that somebody just needs to program it up. And I always get excited when I hear that, but then it almost always is the case that I'll look into it and I'll realize that there is a really, really good reason why people don't do that. Okay, so it looks like Joseph got stopped out there. I kind of like this spot in the profile, like 38:28 for long, but I'm just like 30 minutes to when we're gonna stop. I'm thinking maybe if I did buy it, I'll only take 16 ticks. Oh, there's a question. What was the other question? Sugar Daddy asked me something. Why were you taking 6 trades in a day before? Well, so I'm saying like the robots took so many, and then there was that back test that we were doing that took so many that was like totally different. And then there's just the trades that I took today. Now, the thing that I've changed recently that we haven't really talked a lot about is that I went through and I did some testing and I found that there is some reason for me to believe that I can get 80 ticks from time to time. So what I've been doing is I've been taking it with 2 lots and letting one of them run and taking it off when I see some distribution. But trying to get the 5. I liked Garrage's idea of a stock contest. Well, I'm still doing the stocks. I don't know, man. So the issue with that is that I don't want to be a stock pusher. Oh, I hate that stuff. And I think that there's a lot of issues with that stuff. So I'm managing a portfolio. I would like to make some videos where we talk about that sort of a thing, but I don't want to be making videos where we're basically promoting specific stocks. For now, I'm not going to say that's going to be the case forever, but for now, I'm explicitly not going to promote or push specific stocks. We'll talk about them from time to time when we think they're relevant. But I've even been avoiding like pulling up and looking at mine during the training session unless there's like something going on. Well, so I said maybe go long there, but it looks like Indy's going to lose this one, man. You sound like Sunday Driver, Sugar Daddy. Wait, maybe he is Sunday Driver. Wait a second. I haven't seen them together. No, yes, we have seen them together. So where I get, I see these arguments about like, oh man, some people say the craziest thing. I think that it would be an important thing for the society to recognize that men and women do think differently, and particularly in the forum of political discussion, and that we should do more research into the ramifications of that on society, because there are things about when only men were in charge of the politics that had, positive and negative consequences. And because that had been the status quo for so long, we as a society learned to deal with those problems, right? And we haven't learned how to deal with those problems with men having as much political power as they do now. And I believe that should be an area that we should research more to say, okay, what are the political, policies that women are predisposed to that we have evidence to show that they're problematic? And, how do we teach the society that, the problems with some of these ideas and stuff? Because if we had a situation where like a radical feminist leader took over a country and started committing genocide and things like that, then we would probably take a step back and we would be like, oh, you got to be careful when people start saying X, because that's how genocides start, right? Because that's how that's how we deal with the communism, and not as like a bad thing happened before. We don't want that to happen, but that's probably never going to take it that far. So we don't really have a good idea of like where are the problems that we need to be concerned about, where women voters will lead the democracy overall into making bad decisions. Because there are going to be some things like that, just like there are situations where when only men were in charge, they made bad decisions on certain things, like war, frankly. What if each month we highlighted and followed the oddest, strangest investment out there? Oh, no, but that's the thing, is like that's exactly where it's a problem. When is that I could go out and I could pick a stock that is like just bizarre, right? And then people will watch the stream, or sorry, the video, and they will go, okay, well, I'm going to buy that stock. So now you have a situation where the reason the stock moved was because we talked about it. That can happen, especially if it was a small, weird stock. And I see that with YouTube channels and frankly with Wall Street Bets, that's happening. And I don't want to be a part of that. I would love to teach people anything that I know or think I know about markets, and that includes managing portfolios. But I don't want people to be making specific trades on specific instruments trying to follow me or something that we talked about on this stream, right? I want people to use the information that they're getting here to be able to develop things on their own. So the issue is there's this whole thing where like the way that people work is they say, okay, it's too much work for me to go and learn everything about this particular thing. I'm going to go and find somebody that knows something about this particular thing, and they're going to be the filter for me. And so then I can just do what they say to do. And the approach to markets and trading in particular, that doesn't work. Because there is an execution cost to every trade. And the more people that are trying to take that same trade, the more competition for it is, the higher the cost is for you. So trying to do something that you learned from somebody else and it gets popular just reduces the amount of money that you can potentially make, right? So you have to use the principles that we're talking about to find your own stuff. Yeah, you could approach it from a teaching perspective, but I get your point. Anything that promotes nonsense carries further on YouTube. Yeah, exactly. So then the thing is like for a time we were saying, well, we can pick up politics. Oh, by the way, we had a little cross there. So I guess 38-27, maybe the long here. It looks like both of them got stopped out. That really sucks if that's the case. Yeah. Oh, no, wait. Indy's still in it. Good deal. Or did he just get back in? Oh, that's funny. He got stopped out of it and just got back in. Well, that's interesting. Anyways, so we were saying, oh, like let's do the political thing. But the thing that I found is that when I made a political video and it was good and it did well, it wasn't just not useful to this channel overall. I mean, I guess that would be expected, wouldn't it? I guess you should expect that, you know, you have to make your own separate channel for it. But then the other thing is that I found that the audience that I got from the politics wasn't really a very good audience. There wasn't a lot to make from it and wasn't worth it. Even though it looked like it was actually easier to get clicks on those videos. It seems to me there's kind of a couple of issues. Is one, that political audience just isn't worth a whole lot. But two, that YouTube doesn't necessarily want to promote political content. So that's kind of why I ditched that. So I would like to expand some things, but... So does that put the robots negative on the day now? Just barely negative. But if this trade works out for him, it'll be positive. I don't know. I think Indy needs work. I think probably, you know, the issue is that I bet the reason Indy works in the back test is because there was so many of those days back in like late summer where it would look really ugly at first and then you'd buy the dip and it just turned out amazing, right? And it's probably catching a lot of those. And so when we go into this most recent market regime, it's not as good. But if we can get some situations where it's taking like a short-term counter trend trade, but it's in line with the larger trend, I think we might be able to get it to do okay. So I don't know. We're just gonna have to try it. I will say there appears to be something about his price, man. Do they have a tendency to turn at that spot where it gets in? Yes, they do. But it's like a really, really short term. Maybe if I just gave it like a really, really tight, only make 8 ticks and give it a wide stop, and I bet you that would like get maybe a high win rate. There's something of a lottery effect finding a large audience on YouTube. I wonder sometimes, and you really make hosting this channel look easy compared to some other channels. Is that to mean that like they just don't do as well live, or I don't know. I do have to say there is definitely something to like just doing the thing and you get better at it. That's definitely true of streaming. That at the beginning you're probably not going to be super great at it, but then as you listen to yourself talk and you'll just kind of get in the swing of it, and you just kind of know what you want to say, and you get an idea of what the audience likes and what they don't like and stuff like that. Your channel wouldn't, nor I don't think that it's even so much a matter of that I think that we would move a stock. I do believe though that these stock channels out there, so like here's the thing, the audience for stock trading is so much larger than the audience for futures trading, right? So if I had spent all of this time, the 4 years that we're been trading, and we had spent it on stock trading, then there's a chance that we would be one of those 100,000 channels out there, and these guys that have like hundreds of thousands, I really think that they do move stocks to some extent. But I think I am more concerned about just the possibility or appearance that you could potentially move an instrument that is enough for me to say that I just don't, that's not the game that I want to be in. I don't want the game to be that people watch the channel to get ideas about what instruments to invest in. I don't want it to be like that. I'm intentionally avoiding that. Your voice is very professional. That's a big thing. If someone is listening, you keep a constant pattern of information. Your visual is sharp. Armand Xian asks, did you try the super trend indicator? I did, actually. So let me show you what I tried. Oops, wrong one. So maybe you tell me maybe the way that I did it is the wrong way. Oh, where did I put it? Oh, okay. I just have it in the general thing. So I made it really simple. I just said if you close, if the close moves across the trend bit, I go long, and if it moves down the other way, then I enter short. And it was interesting. It wasn't like just like a straight moving average would be. It was definitely different. But when I did that, let's see if I can still find it. I deleted it. I'll run it again because it's not a tick replay. It should be pretty fast. Oh, I did put it in the... Oh, that's funny. Okay, there it is. Super trend. We just take off tick replay. Can run this on minute bars. Stop target 1-to-1. And use past year's worth of data. 1. Food Commission. Okay. No, by the way, where is this? Oh, I see. Did that not take any trades there? Oh, no, yeah, it did. Anyways, so with just those entry conditions, you can see that it's actually, so like 48.32% is not bad. So that to me is like, it's not like there's not something to it. It's not enough to overcome the execution of it. Okay, let's see here. Based on my experience, it is best to get in when the price goes near floor or ceiling of the super trend and reverse if signal is false. That way your losses are minimal. I'm not sure I completely follow. Let's pull up a chart. E-mini's behavior is starting to get a little random, by the way. Possibly even a head and shoulders kind of a pattern. Although that's a little hard to read. That the volume is making consecutive peaks. If it turns back down and it touches that neck really quickly, then maybe we could have that. Okay, indicators. Well, just because I have the ability to see both sides of an argument and go through all of the different possibilities when a regular person just ignores them all doesn't mean that there's multiple voices in my head too. By the way, you need to make sure down at the bottom there's like in the YouTube window there's something that says live, and you click that live and make sure that you're caught up. So it looks like you maybe are a little lagged. Super trend. So the first thing that I noticed about the super trend was that there was like way more properties on it than I expected. So that's one thing. Now there is this thing where like here, that's kind of interesting. It looks like there was a couple of places where they tested the line but weren't able to close below it to actually trigger the super trend to change. And so that ended up holding. We could look for that, although it did it a couple of bars in a row. So that one's kind of difficult, and I don't know how often that happens. Since super trend is a trend indicator, you don't want to get in when the signal comes in. You need to wait for the pullbacks. Sure. So you're saying that, for instance, right here, well, this one is probably a really terrible example because there was a trend and then it reversed and, whatever anyways. But you're saying, let's just say for the sake of argument that it triggered up on here and then you would wait for it to come back. Like we could use the Fourier series analysis to determine when we've had a pullback. And if it's still in trend, then we take it. Yeah. We could try that. We could basically make a new version of Joseph that uses the super trend instead of the MACD and try it. Yeah, so is there certain settings in the super trend that you thought worked better? So that was the other thing is I was like, wow, like there's so much you can change about it. You need it to be less sensitive. Well, yeah. Be less signals, but less bad signals as a result too. I don't think though in this, where's the back test? How many per day? Oh, okay. 22 is too many. Well, what are the settings that you use in Sierra chart? So here it is. So here's the thing is like the you can change the types, right? There's a median and you can, that's based on true range, and there's a wilder, and then there's 3 numerical values. Yeah, of 6 to 8 signals. Yeah, okay. Sierra's super trend is not as advanced as I bet. I kind of wondered, like, why does he give you all of these options? Maybe because people just ask for it. No, I was going to make a video about Bollinger Bands. Blech. I was going to make a video about Bollinger Bands, and I used Lizard's version of that for that. I saw somebody else had posted a video. I think that I have more to share with it, but because somebody already put one out about that, I'm thinking now that maybe we should do a video about R squared first instead. Use 7, 1, and 3. I think that's less. Well, so on a 3-minute chart would do something different for sure, but you're using a baseline period of 7 and an offset period of 15 and a multiplier of 2.5. So the multiplier, if we wanted it to be less sensitive, right, probably the best thing that you could do is change the offset multiplier to 3. Right? I'll zoom out and change it back again, and then you can see that it's a little bit better. 2.5, 3. See? There's like all that spot right there, and if I do 3, then those go away. Okay. Now a baseline period of 8 doesn't really make sense. Maybe we could do 10 and 20. Yeah, it doesn't really change too much. 50. Yeah, that kind of allows that to stay a little bit longer. It makes sense though, and it's better. It's maybe a little bit better. Anyways, when I don't think I did how I guess I didn't spend as much time on it as I thought. I think that's because we did that with the ATR stop. When I did the ATR stop, remember we found that like those settings, like the original settings were like worked best. That's so often the case that the original settings work best, but I digress. It's time for me to go, guys. I'll take a look at that again if I have time after this other stuff, but I'm going to bet that I probably won't have a whole lot of time to program today because I'm going to work out and got busy work stuff. And yeah, so see you guys tomorrow though. Make sure you've subscribed. Check out the speculatorseth.com indicators. Got a couple, 1 or 2 of you that did subscribe to the Elite that hasn't sent me the activation email. So make sure you do that. Anyways, stay. Oh, okay. You get it. Well, I'll take a look at it again, Armand. All right. Anyways, stay profitable.